All right. So thanks for joining me here today, Matt. Uh we're gonna get jump right into the show. I appreciate you for joining. Just to give a little bit of background, I want to first congratulate you for building the real estate portfolio that you have with the Picheny company. The growth in your first 5 years has been amazing, being able to become a partner in over 4,500 units is incredible. And your advocacy for impactful investing is really admirable. Improving communities and leaving them better than you found them is, I think, a really great initiative to have along with, the growth of your company. Thank you for joining again, and welcome to the show.
Well, thanks for having me. It's a pleasure to be here.
Absolutely. So I want to, just give you a quick overview. We're going to start with your background and some industry trends that you may be seeing. Then we'll discuss some of your current challenges and where you'd like to be in the next 6 to 12 months. And then we'll wrap up. It shouldn't take more than 30 minutes. Okay.
Sounds great.
All right. So just share a little bit about your role and how it fits to the bigger picture at Picheny Company.
Yeah, so my name is Matt Picheny. I go by the sort of moniker of your backstage guide to passive investing. And so my business really is sort of twofold. One, the primary focus is acquiring real estate projects. We work on, as you said, a lot of projects where we can go ahead and make improvements and elevate the living conditions for the people in the property and also make a profit while we're doing that, right? This is not a charity, but it is important to us to make sure that we're making improvements and making life better for everyone involved. That includes the residents, that includes the staff who work at the property, and it also means for our investors who are investing alongside us in these deals. We look at multifamily properties throughout the country with a primary focus in the Sun Belt. Properties are in the state of Texas, the state of Kansas, state of Missouri, and the state of Georgia. So that's where we've been focusing our efforts as of late. Also, on a side note, me personally, I've invested in a lot of apartment units on my own, not as part of the company. The ones that we do as part of the company, we are a general partner. We are working on those properties, acquiring them, managing them. That portfolio is almost 5,000 units at this point. But as a passive investor, I've also invested in over 7,000 units. So I tell people, yeah, I'm in over 10,000 units now. It's probably closer to almost 15,000, lifetime as an apartment investor. And I started doing this really full time back in 2016. Another aspect of my business is I have a program that I call Scaling Up with Syndication. And what I do with that is I actually teach people who are interested in growing their portfolios and actually doing what I do. People who are interested in buying larger apartment complexes and bringing alongside investors to invest with them. So I have a coaching program where I work one-on-one with people and teach them how to do that. So that is another aspect of my business.
Awesome, awesome. Again, I think that's amazing to have not only a traditional business structure where you're looking to get a return on your investments, but also helping others enter the business and learn how to invest and get a return on their investments in the space as well. Amazing. It sounds like your footprint will be continue to be great. So thank you for sharing. Can you tell me a little bit about what your typical day looks like for yourself?
I don't know that I have a typical day. Every day is a little bit different, which has yeah, I love having the variety in my life. Yesterday, I did a bunch of, let's see, I did some administrative tasks that needed to get done. We've got K1 reports that we're getting out to investors right now. It's because it's that time of year. So happy to be getting them out before March 15th. Today's March 12th when we're recording this. So getting some of those out earlier is nice. And let's see, I had with some coaching students, and I have a weekly group call with students as well. So I did that. I have a team my internal team, we meet every day. So I met with my internal team, talk about the different tasks we have going on. Um, Had some meeting with general partners on some of my deals. Had one meeting with a management company to we do on a weekly basis. We're checking in on how the properties are performing, so we had to do that. I had two different calls with general partners about specific issues on specific deals. And then I left a little bit early for the day because I had to get on the train and get into New York City because I run a meetup once a month. And so our monthly meetup was last night. So we left the office a little early, but was, I guess, theoretically working. Right? Went into New York, went to the location for our meetup. We had a wonderful meetup. I was trying to leave by 9 o'clock so I could be on the 9:30 train home, but after my presentation, a lot of people had a lot of questions and wanted to talk. And I looked at my watch and it was 9:33, and I was like, I missed that train. So I ended up catching the 10:30 train. Got home, took out the garbage because today was recycling day. And then got to bed. So it was a longer than usual day. My days usually end around 5 or 6, just sort of depending on what's going on. But when I have a meetup, it goes a little bit longer. But I mean, it was all fun stuff. I mean, I love talking with people, running the meetup, having conversations with investors who are already in the business, which we have a lot at the meetup of people who are already doing things. And then we have a lot of people who are brand new and are just starting to explore this. And for me, it's really fun to talk with people at all different levels just about real estate and what their interests are, why they like it, where they see things going. And so, yeah, it was a good time.
Sounds awesome. Sounds awesome. Sounds like a really good mix again of impactful things as well as, really traditional business that pushes the needle forward. So awesome day. And it sounds like that meetup was really great. It's always a good thing when people have questions about your presentations, right?
Yeah, I think so. I mean, they were all good. They were all good questions. So, and Derek, I'm looking forward to having you come to one of those in the future too.
Absolutely. I'll be there next month. So, speaking of the meetup in the communities, in the industry, let me ask, what major shifts are you seeing in the industry right now?
I don't know that I'm seeing any major shifts. What I am seeing is, we've had a rough couple of years here. Real estate, commercial real estate valuations have gone down. I think that is mainly because the cost of capital has gone up, right? Our borrowing costs have gone up, so therefore, our debt service payments are higher, so we can't offer as much on properties. With that, with the interest rates having gone up, there are people who have had issues, and I'm not immune to it either, by the way, but people who have had issues with properties. And, there's been stress on some of these deals. And so we have seen some operators go out of business. We have seen I've unfortunately seen a couple of operators who've actually been accused of wrongdoings. Which is upsetting, and actually, quite honestly, one of them I was shocking to me. I've known this person, never done business with them, but known someone who they seemed like all on the up and up, and there's all these allegations against them. I'm like, wow. So that's kind of crazy. So we're seeing, I think, some people leave that. I've also seen some people shifting that are in the real estate business into other sort of passive investments. One of those that seem to be very popular nowadays is car washes. And so, I don't think there's anything wrong with that. I do wonder, I hope these people actually understand what they're doing and how to run these businesses. Some of the people who are doing this are business people and serial entrepreneurs who've done many different businesses. That's all fine and dandy, but there are some people who are just solely doing real estate. And I feel like I've kind of just shifted because the winds in the market have been, sort of shifted a bit, but that doesn't necessarily mean that you should quit and do something else. So I don't really, some of it I just don't understand. It doesn't seem congruent to me. No offense to anybody who's doing that. It seems a little, I guess, not knowing why they're doing that. It just kind of seems a little out of left field. For me, I do and have been involved in some other types of investments besides real estate. That's why I call myself the Backstage Guide to passive investing, not just the Backstage Guide to real estate, mainly because of my interest and involvement in Broadway musicals. So my wife works on the business side of Broadway, and I've been fortunate enough to partner with her alongside of her on some projects that she's worked on. We have a musical that we have in development right now. We've been involved in a few shows. Actually, I have a couple of Tony Awards that you might see back there if you're watching this video, which has been like a lot of fun to do. And I have a background in theater. I was a professional actor for many years. So, it kind of makes sense, right? If you understand that background and sort of who I am, what I'm about, where I came from, and who my wife is, I think there's a narrative there that sort of makes sense. But there are still a lot of people in real estate who are doing well, who are making it through what are some tough times now. And I think we'll get to a point in another, I don't know, 12 to 24 months when things have sort of stabilized. I think they've kind of stabilized right now, and I think we're going to start seeing things going back up. Real estate, just like everything else, is in a cycle, right? So there are bottom parts of cycles and upper parts, and we were in an upper part for quite a while. I think we are now maybe in a dip. I don't know if it goes lower. I don't think it does. I think we're starting to see some equilibrium, and I think we'll see markets go up in valuation over time, especially as the economic landscape gets some stability. Right now, we've got President Trump in office, and at the moment, currently, there seems to be a lot of question about what's going on, especially as regards to tariffs. What's going to happen with the tariffs? It seems like they're on, or they're off, or they're paused. And that uncertainty has led to, I think, some issues that we've seen in the stock market, where just a lot of investors are unsure of what's happening moving forward. I know that also the Trump administration is talking about redoing tax, and it's time to redo tax policy, right? To see what sort of taxes are going to look like. So I think that within the next 12 months or so, we'll have some stability because we'll know tariffs are on or off, or with whom and how much that the tariffs are, and how that sort of permeates throughout the economy. That may affect interest rates to some extent. Some people are saying, I believe it's Goldman Sachs has said, I think it was Goldman Sachs and Chase that I heard that said that they're expecting a recession, or that it's likely that we'll be in a recession or something like that in the next 12 months. I don't have the exact quote, but I just heard that 2 days ago. 12 months from now, I think we'll have an understanding of where we are, what the economy looks like, what tariffs look like, what tax policy looks like. And that just having that stability of just knowing what it is, I think helps buoy markets, just knowing what it is. I think the uncertainty is causes concern.
Yeah, I completely agree with you. I think you gave a great synopsis of what's going on. With the new administration coming in and implementing the changes that they'd like to see, it comes with a lot of uncertainty in the market, and you hit the nail right on the head. It's a bit of scrambling from investors and other participants trying to adapt to some of the changes being made and, weather the storms, so to say. So I definitely do agree with you that once we get some more clarity in the next 6 to 12 months, that we'll see some more stability, and everybody will be able to steer their ships in the way that they'd like to. So definitely agree with your synopsis. Very, very informative, and I appreciate that. So let me ask you, with all of these things going on, I think that there's an underlying narrative of emerging technologies within the industry that are somewhat transforming the industry. Can you tell me, how has technology impacted your business or your growth strategy?
Technology is something I've always been very interested in. So I got involved in the internet and had my own actually boutique development shop here in New York City in the mid to late 90s. So I've always been interested in technology. And yeah, matter of fact, when I left that, I was working as a programmer for companies and working sort of on the tech side of things, and then moved more into sort of project management. But I've always found it very interesting, and I love the idea of leveraging technological advances. I think that you have to embrace them, or you end up like some of these companies that did not embrace them, such as Blockbuster Video, that went completely out of business. Used to be a huge, huge business, and just they lost everything. And so I've always been, I think, a somewhat early adopter of a lot of technology, and I use technology in my business. I will say that most of what I do from a business aspect on the purchase and operations of actual properties, a lot of that is not done through technology. A lot of that is done through personal relationships. I think multifamily real estate is definitely a relationship business. So, in terms of, for example, I could go and start scouring through data to find properties that might be available for sale. I actually get phone calls several times a day, especially for my smaller properties that I own individually, people asking if I want to buy, because I think there's different ways of doing it, but a lot of times you can go through public records, see, hey, is the owner out of state? Okay, someone owns this property, but they live out of state, or their mailing address is out of state or whatever. So contact them, and then I get phone call. I almost never pick up my phone if I don't recognize the number, because I get several of these on a daily basis. It's quite annoying, even though I'm on all the do not call registries. It doesn't matter. So so I get phone calls all the time for that. And I don't even pick up I don't even pick up the phone. I know it's not even going to be worth my time to, people want to put in these stupid lowball offers, and I'm not interested in selling them. The same thing could happen on larger scale, right? You could look for larger multifamily properties, but the bottom line is the people are listing their properties on the market, and they're listing them with brokers that they know have a good wide reach and can fetch them top dollar. Selling to, like, this is the thing, like, if someone's gonna call, I mean, unless someone calls and offers me some stupid ridiculous offer on something that, maybe I would entertain it, would probably end up being a waste of my time, but a lot of times those things just won't work out. They won't get the lending they thought they would get or something like that. But I think that you could leverage technology to make all these phone calls, but I don't think you would get a lot of responses. And I think any responses that you would get wouldn't necessarily be like, oh yeah, let me just sell you my property, versus listing it with this broker who's been calling me for years and took me out for coffee or lunch or whatever. The I idea of leveraging technology to acquire properties, I don't think is a good one. I'm not saying it's not possible. I'm sure some people have gotten properties from that, but I think most people, especially when you're looking at the larger multifamily, which is what I focus on, are going ahead and listing it with brokers. So developing those relationships with brokers, with property managers, and then directly with property owners is the way that I've been able to acquire a portfolio of almost 5,000 units. I don't see that changing. I really don't. There's a certain amount of trust that you have to have when you're entering into deals like this. You want to be sure that people can close on deals and things of that nature. So someone's profile on a screen might look really good, but are they somebody that you can trust? Are they somebody who can actually close a deal? Over time, can that move digitally to some extent? Sure. But I don't know if that will replace the sort of human connection that's needed for that. Now, that being said, there are many things that we do use technology on in terms of like managing the properties, right? We love using technology to, well, first off, payments, just from a payment perspective, right? Collection of rent, payment of expenses, all done electronically now. Very seldomly do we even take a check or a money order. We do accept those, but we encourage residents to pay electronically and try to do things and to incentivize them to do that. We make all of our payments electronically. We're not accepting Bitcoin yet, although maybe we will at some point in the future. But so we've got all of that going on, and everything's in our property management software. So we can pull reports, we can see how things are doing. We can get a lot of different analytics and data from those tools. So I find them extremely helpful. And then on the rest of the aspects of my business, and I have a CRM that I use to communicate with potential or current investors, people who are interested in my coaching program and whatnot. I mean, I have a newsletter that I send out on a monthly basis. Yeah, I use the CRM for that and for all communications, and keep all the information in there. I also have a digital portal for my investors so that they can go see information on the offerings that we have, watch video of a live presentation if they can't make the live. We do a live presentation via Zoom when we have an offering. I'm also on Zoom. We are right now, and I have individual calls with people all the time. It's great because we can share screens and things of that nature. But I do weekly calls with my coaching students on that. I do a weekly, almost every week. I do a live on Thursdays on Facebook. I do a Facebook Live, a free session where people can come and learn about. There's a different topic each week regarding multifamily real estate. People come to that, so I'm using technology in that way. I use social media. As I was saying, we have an online portal where investors can go. They can watch find out information about any offerings that we have, watch the live webinar that we had done. We have a recording of that. I do a lot of video things. We also, on that portal, people can subscribe to the investment offerings all electronically. They can sign their documentation electronically. They can see how their properties are performing, right? Distributions that get sent out, monetary distributions are recorded on there. So they can see that. We deliver our K1, the tax documents, electronically and securely via that portal. And then, yes, as I was saying, social media, I have a YouTube channel, right? So do a lot of content creation and education that gets disseminated to people through technology.
No, that's awesome. It sounds like you're doing a ton of amazing things, leveraging technology in your business, as you mentioned, from social media to some of the operational tools out there to help and smooth out some of those efficiencies and be able to make life a bit easier for yourself and more convenient for your tenants and other constituents as well. So it sounds like it's really helping. It's more supportive, and which I think is the wave of the future as far as technology impacting the real estate industry, is more of a supportive factor and more supportive solutions rather than necessarily taking over. Like you said, that human touch in real estate, I don't think we'll ever lose it because it is necessary to have that rapport and understand who you're speaking to and have that trust, especially when you're talking about larger deals. But I think even on smaller deals, it's very important. Last question about technology. So I'm realizing that AI is one of the most popular technology solutions right now, impacting all industries. If I could just get a little bit of insight from you, how do you see it impacting real estate? Are you using it in your business? Are you seeing others use it in their business? What do you think about it in general?
Sure. I mean, I think, when it comes to AI, there are some great advantages, right, to this machine learning where, if you're able to get the right data in there and train the models in the right way, you can do a lot of things much faster. So, for example, underwriting. I still use Excel. I still like using my Excel for underwriting, but I know there are a number of AI underwriting tools that are out there. They're getting better. And I think in the near future, I'll probably switch over to one of those, but not at the moment. I'm still quicker and faster. It's all about efficiency, right? And right now, it's still, I think, quicker and faster, especially for someone who's been doing it with Excel for quite some time. And my Excel spreadsheet is actually got some good formulas in there. So it does a bunch of stuff. But I could definitely see moving over to an AI type of model that would pull in information, and I could type in my parameters, and it will at some point be able to do that faster and more efficiently, especially if it can pull in different data sources from elsewhere. So I do see that probably changing in the near term. I do use AI right now a lot when it comes to content creation. I use a number of different AI tools, whether that's, Chat GPT, Perplexity, Claude, and I use all of these as collaborators, depending on what I'm doing, what I'm looking for, what if I'm researching something, or sometimes when I'm writing. So, for instance, I wrote my book, Backstage Guide to Real Estate, selling book. I wrote it by myself. I had a writing coach who helped me because I'd never written a book before. So I hired a writing coach, not a ghostwriter, but a writing coach to help me along the way. If I were, and I probably will, write a second book, I don't know that I need a higher writing coach. First off, I learned a lot from that first experience. But secondly, I might use something like a Claude or ChatGPT to sort of help me with that. I use them a lot for brainstorming on ideas on potential topics, on things like that. But it's not like I type in something to ChatGPT, hit enter, let it develop a thing for me and just, put that out there because um, sometimes there's some garbage, right? AI, artifacts that are in there that's just stuff that's unintelligible or doesn't make sense.
Right.
Sometimes the data is wrong. Matter of fact, I was working on something with ChatGPT not that long ago, and I had a specific word count I was trying to hit, and it told me it was that word count, and I copied it out of ChatGPT and put it into Microsoft Word and did the word count. It was totally wrong, like completely wrong. And then I called ChatGPT out on it, and I said, "Hey, this the word count you gave me is wrong." It's, "Oh, I'm sorry, you're right. But that was wrong." I was like, "Yeah, well, I did." So you gotta check up on it. It's not, and some of the data I've seen it pull data that's incorrect. So you gotta be careful with it. But I do find it good to have, for instance, the name of my coaching program is called Scaling Up with Syndication. That came out of probably an hour-long brainstorming session of me with ChatGPT, me throwing some ideas out there, getting ChatGPT to actually give me some feedback and variations. And then I would say, oh, well, I like this and this and this. Can you give me some more variations along that? Blah, blah, blah. The actual final scaling up with syndication was not presented by ChatGPT. It actually came out of my brain. ChatGPT and I had collaborated some stuff and we were getting close to that. And then I was like, oh, scaling up with syndication. That's really what I want to call it. So I just find it helpful to have some person, or maybe not person, but another thing to interact with and, sort of bandy ideas back and forth.
Absolutely, absolutely. I think that's a great way to use it. Again, as supportive, kind of as a sidekick to bounce ideas off of. They can, give you some feedback. You can get the creative juices flowing. You can, get your mind rolling, and it's really helpful in that way. I think we'll start seeing it do a ton of things. I think, as you mentioned, there are a ton of improvements that can be made for the long term. It does hallucinate a bit where you got to tell it it's wrong and then it'll correct its mistakes. But really exciting to see how it'll continue to impact businesses. I'm sure you're seeing that impact already. Thank you for sharing everything that you have with us today, Matt. Really, really interesting conversation. Um, Feel free to, can you tell the listeners where they can find you?
Yeah, go to scalingupwithsyndication.com. If it's easier, just go to Picheny.com. It's Picheny.com. I've got tons of free resources, free videos, like free downloads, just lots of stuff for people. So if you're interested in real estate, check it out. And yeah, thanks for having me on the show, Derek. I appreciate it.
Absolutely. Thank you for joining us. And it was great. So we're signing off with Matt Picheny.
All right, thanks.
All right.